Citibank is planning to sell 1.3 billion of Venezuelan gold to satisfy a debt, speculating this may put downward pressure on the metal. If possible and appropriate, please teach on how to gather legitimate fundamentals, analyze technical data, and target entry point for a potential short or a reason on why not to short sell. Okay, so for those of you that are not familiar with short selling, it's the opposite of buying a stock. Okay, and the way you do it is you borrow the stock from somebody, and the trading floors from the big firms like Goldman Sachs, Morgan Stanley let you do this. You borrow the shares, then you sell it, and you hopefully buy it back at a lower level. Then you return those shares and you made money on the profit between where you sold that and where you bought it back at. Okay, it's the opposite of going long, meaning it's the opposite of a buy. So when it comes to, this is a tough one because a lot of times you short because the market doesn't realize or doesn't fully appreciate a bit of information out there. But I have to say that a lot of people are probably already familiar, and I'm just being devil's advocate here. A lot of people are probably already familiar with the fact that Venezuela is going to be selling this large amount of gold. And if the price is not pulled back because of that, then you might have a decent short opportunity there. I don't give advice on which stocks to buy or sell. I teach you how to fish instead of giving you a fish. But if you're going to do it, then I recommend looking at the ticker GLD. That's the ticker for gold. And let's go there together. So what we can do is we can go to Yahoo Finance, okay? And what you do is you type up finance.yahoo.com. And just like stocks have tickers, precious metals have tickers too, through what are called ETFs. So if we type in GLD, which is the ticker for gold, we can see it's right here. Now, you also asked me a question about technical analysis. And although I don't believe in technical analysis as much for commodities, I do a little bit more so for individual stocks. What you could do is you could look at various indicators here, like the relative strength index, okay? And you can add a bunch of indicators here. So RSI is one of them. And what the RSI means is it's a technical term for have too many people bought or have too many people sold this stock or this financial instrument. And whenever you get a reading of 80, which is categorized as green here, that means it's overbought. And if you get a reading of 20, meaning a red line, it's oversold. So let's put those here on the graph, okay? And a lot of people think that this is not the best way to invest, and I agree with those people. I like to look at fundamentals first, valuation second, and then third, I like to look at technicals for when entering or exiting a position. And so the way you would look at technicals, and I'm only answering this question because you asked about technicals as well, the way you'd look at this technicals chart with gold, ticker GLD, is if the red line here, or red bar here is violated, right? If it's touched, then you would buy because it's oversold, and vice versa. See up here how this green line here is touched. That means it's overbought, and you would sell. Okay, and so right here you can see at this point, back January 3rd of this year, gold was actually overbought. It touched the upper level of the relative strength index, and some speculators actually sold it. So it dropped in price from 122, the GLD ticker, to 121. So that's a tiny amount of profit. Couple percent annualized is not bad actually, but this is how you would look at technical analysis. Andrew, other things you could look at also is you could look at the 50-day moving average as well as the 200-day moving average. And if you go up here to indicators, again in Yahoo Finance, and you click on a moving average, we can add the 50-day moving average, and you can color code it as well. Let's color it in, I don't know, dark blue here. Okay, so we click save. And technical traders would basically get worried in general when any financial instruments, and again, these are short-term investors. I'm more long-term focused. So technical traders would get worried and sell a stock or a security or an ETF, for example, like gold here, if it violated the 50-day moving average here. And sometimes you have to wait until it really violates it by more than just a couple percent before this technical indicator makes sense. And so here we can see it was relative support for a while. It's not a perfect science. So what we can do is we can add the other indicator that people look at. And the reason I'm talking about this is because sometimes it becomes self-fulfilling. If it violates it, then whatever the market believes that, oh my gosh, especially the traders, that this stock is going to go down, or this financial instrument, because it violated the covenant, the moving average. And sometimes some people will refer to when the 50, this is the last thing I'll say about technicals, when the 50-day moving average goes down through the 200-day moving average, they call that a golden cross. Again, when the 50-day moving average goes below the 200-day moving average, that's a golden cross, and a lot of technical traders will sell the position. Again, I believe in looking at fundamentals and valuation first. But in this case, here, we had the opposite of the golden cross. But if you go way back here, you'll see you actually got a golden cross. So if we go back here to June 22nd of 2018, the 50-day moving average, which is blue, passed down through the 200-day moving average, which is green. And that is a golden cross. And some traders saw that and thought, oh my goodness, look at it, it's violating that technical covenant. I'm going to short GLD. And lo and behold, GLD went down a lot, partially because of that, but mainly because of fundamentals. And by the same token, when you saw the opposite of the golden cross here, the 50-day moving up through the 200-day, and this was back on January 22nd, then some short-term oriented investors started to buy the stock, or buy the GLD ETF here. And I like buying ETFs instead of individual stocks, and I like buying ETFs instead of individual commodities because they're much more liquid and you can get out of them really, really quickly. Just make sure that the fees on the ETFs are less than 0.5%, unlike mutual funds, which almost all have rates of 3 or 4 or 5% per year in fees. I think mutual funds are the worst investment you can make. If you have additional questions on this, please let me know. Thanks.